Time to circle the wagons. This is Mohnish Pabrai's new mutual fund called Wagons Fund. You can find two different ticker symbols, the retail class, which is WAGNX, and the institutional class, which is WGNIX. Now, if you're wondering what the difference is between the retail institutional, essentially that is, we'll go into more detail in this video, but it requires a lot more for initial investment into institutional class versus the retail class. You can kind of think of it as Berkshire Hathaway. Berkshire Hathaway has a couple of different classes that you can invest into as well. One class is the retail class, which the stock is around $300 there. The other class that's available is, you're talking like $300,000 or even more at this point. So this video is really talking about Pabrai Wagons funds, kind of what the fund is all about. This is a fund that I am going to be tracking very closely going forward. In fact, I'll probably be buying into it at some point and tracking within my own portfolio. So if you want to take this journey along with me, I encourage you to subscribe to the channel if you kind of like this kind of content, if you want to follow it moving forward. So let's begin. All right, so the Pabrai Wagons Fund opened up on September 29th, 2023, and the initial net asset value, so what you could actually buy it on the market, was at $10 per share. Now, if you're wondering what it's trading at today, keep in mind it's only been trading for about a month, but this is where it's at right now. So you can actually see, again, open up around $10. It dropped all the way down to about $9.26, and then today it's trading at $10.59. So the goal of this fund is long-only public equities, really concentrated with a target of 15 to 25 businesses. Now, we're going to talk about each business that he owns right now in the portfolio. And it's not quite as many as 25 businesses. I think it's around the 10 to 15 mark. So I would expect that to build over time. So really the foundation of the fund, he's seeking to invest in durable, growing businesses with robust investment engines and an aligned, high-integrity team that we would be comfortable owning for a very long time. He wants to acquire these businesses when they are being offered a meaningful discount to their underlying intrinsic value. So that really is the foundation of value investing just in general, right? You're trying to find a business you understand, that has good management, shareholder-minded, and then also has hopefully a long runway in front of it, and ideally at a margin of safety. So Mohnish is the one running this portfolio. So anything that goes in and out of it has to go through Mohnish. Like I said before, this opened up on September 30th, 2023. Mohnish manages approximately $900 million in assets under management and private partnership, mutual funds, and separately managed account assets through the Dondo funds. He has a long history of investing going all the way back to the mid-1990s. In fact, I was watching a video of him recently, and he initially, when he got into investing, which I want to say was in 95 or 96, if I remember correctly, but he bought 4 stocks in India, and one of those stocks shot up over 110-fold, or the other stocks either did nothing or actually lost money. So he actually put, something like $20,000 or $30,000 into that one stock that just ended up 100xing, and it had about $1 million in it when he was all done. So I think he kind of realized at that point that he was pretty good at investing, and that's kind of what he wanted to do long term. So going back to the value investing mentality, Mohnish Pabrai is a big advocate for Charlie Munger, Warren Buffett, and a lot of those investors who've kind of tailored the way for us value investors just in general. So I love this slide here where it says the first rule of compounding is to never interrupt it unnecessarily, and that was spoken by the late, great Charlie Munger. So the investment philosophy for this fund, and really Mohnish, when he's looking at this fund, is rooted in the belief that exceptional investment performance is usually the product of only a few great investments held for a very, very long time. One friend of Mohnish Pabrai's is Guy Spear, and if you follow Guy Spear at all, he also manages hundreds of millions of dollars worth under his fund as well, which, if I remember correctly, I think it's called Aquamarine. You guys can correct me if I'm wrong in the comment section. But Guy Spear is notorious for buying a business and literally never doing anything with it. I mean, he's bought MasterCard, Berkshire Hathaway, and he's had those businesses for years and years in his portfolio, and he does nothing with it. So you don't see him buying and selling at stocks at all. I would say a lot of other value investors, even big value investors that are out there, you do see a lot more trading with that. And even in Pabrai funds, which is another Mohnish Pabrai portfolio, definitely see more movement in that type of portfolio, where this mutual fund is more geared for the long term from what I can tell. And I don't expect to see as many trades going in and out of this particular fund as his Pabrai funds. But I guess we'll have to see as things goes on. Now, the Pabrai funds, I thought this was kind of interesting. So this Wagon fund specifically is reminiscent of the defensive maneuver of American pioneers in the 1800s. The fund will never circle the wagon. So I thought that was pretty clever, to say the least, naming the fund after that. So it's around its highest convictions, which we talked about earlier, which it believes will have the highest potential for investment returns. So I thought this was a really great slide. So this is from Warren Buffett from his 2022 letter to Berkshire shareholders. He says, in 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so. Our satisfactory result have been the product of about a dozen truly good decisions. That would be about 1 out of every 5 years. And we'll go more into this in a second. There's another really great slide coming up that talks about these really high convictions that did really well for Berkshire Hathaway, Warren Buffett, Charlie Munger. But I think the overall summarization here is saying that, hey, you know what? It doesn't mean that you buy 10 stocks and 10 stocks are going to do good. Maybe you buy 20 stocks and maybe just one of those does really, really well. I mean, look at Warren Buffett. Apple, for example, has been a tremendous purchase of his, Coca-Cola. He's got a lot of others, and we'll talk about those more in a second. So this is really good, I think, as value investors or investors in general. You're not going to hit home runs with every single stock. In fact, it's probably going to be a very small number of stocks, but those are the ones that really can catapult you. There's a book by Guy Spear called The Intelligent Investor, and in there he talks about a Wall Street Journal survey, or actually I could tell it was an article, but they go deep into portfolios, in particular portfolios that have been stagnant for a long time. So they looked at a bunch of different portfolios that people actually passed away. And so they just kind of sat there for years, even decades potentially. And what they noticed going through that survey and that research they did is that most of those portfolios actually beat the market. And the theory behind it is that you didn't have an active manager that was trading in and out of stocks. They bought stocks and they just let it run. What was even more interesting, say if a portfolio had 10 stocks in it, they would say about 7 stocks really didn't do much over a 10-year period. You'd have 1 or 2 other stocks that really tanked, or maybe the stock, or company went out of business, stock went to zero, and then you'd have maybe just 1 stock in there that was 90% of the growth. It just completely took off over a decade. And I think that's really good for us to know as investors that you only really need one really good home run, every several years to do very, very well, even maybe one every decade. But the important thing is to hold on to those really great investments so you can get those really high returns over the long term. So here's that really great slide I was referring to about Berkshire Hathaway, where they made over 300 decisions over decades of time, but there were only 12 really great purchases or stock trades that they did in their portfolio. So less than 5% of the stocks they actually bought. So that's roughly 1 out of 20-ish or so, if I'm doing my math correctly in my head, that actually performed really, really well. And here's some of them. So Geico, Coca-Cola, American Express, See's Candy, Apple, Gillette. They also even mentioned that the vice chairman of insurance operations was also a very great hire for them. One that sticks out to me right here is the Washington Post. Hear much about that transaction or the trade that they did, but if I remember correctly, I think this was back, I want to say in the 70s. If you guys, if I'm incorrect, throw it down in the comment section. But they ended up buying into Washington Post and it completely tanked. I mean, I think they were down 60, 70% at that time, and they kept buying the stock. It ended up actually being a huge return for them in the very end. I don't remember what the total was, but they ended up getting a ton of money back, and that was one of their best investments they ever did. So it goes back to buying into high conviction stocks at a significant discount. So here's some key principles about the circle the wagons type approach in the Pabrai Wagons fund. So the fund seeks to follow these long-term circle the wagon principles. Do not cut the flowers and water the seeds. That's number one. So hold on to the great businesses for dear life. Number two, do not pay for fancy prices for great businesses. Number three, focus on the great businesses with great people and long runways. So these are companies that have really wide moats. So they have a competitive advantage. And then they have proven ability to reinvest capital at high rates without accounting gimmicks or much leverage. So here are their top holdings as of October 17th, 2023. So these are top 10 holdings. And again, they talked about earlier that they want to hold 15 to 25. So it's hard to say how many they have in their portfolio. My guess is it's probably not quite 25, and they'll probably be adding over time. But Alpha Metallurgical Resources, Consul Energy, those are top two. The fourth one there is Arch Resources. So all those have to do with coal mining. I actually did a whole separate video on that previously on my channel. In fact, just a couple of weeks ago when I talked about Pabrai funds, and I went deep dive into Arch Resources. So if you want to check that out, I'll put a link in the video down below in the description. So that kind of talks more about the coal industry and maybe why Mohnish really likes that particular industry in general. But some of the interesting ones I see on here is Amazon.com, you have eBay, Microsoft, so there's some big companies that he owns right now. Brookfield Corp, that one's interesting because he actually sold out of his Pabrai funds, but we see that here. So it will be interesting over time to kind of see how this kind of plays out. But you can see, Canada stocks, Turkey stocks on here, United States stocks. So he is a global investor. Also, what I take from this is that his top, let's see, 1, 2, 3, 4, 5 stocks. So his top 5 stocks in here, 50% of his total portfolio. So those are the ones he has the highest conviction in right now. And then the other ones only make up, roughly 3% each, and even farther down as you move down the line there. So definitely the top 5 are his highest conviction stocks that he has right now. Now, if you guys want to personally invest into the Pabrai Wagons fund, you can only do it in 2 ways right now. Unfortunately, you have to go through Interactive Brokers and then also Vanguard. Actually, I have both of those. So I have a Roth 401k through Vanguard, and I also signed up for Interactive Brokers a few months ago to kind of check them out. So I do have access to these. I'm not sure which one I'm going to use to actually buy, and it'll probably be Vanguard. But what's interesting is that this is a mutual fund, and all the brokers won't just accept a new mutual fund and allow them to trade on their platform. They actually have to get requests from their clients. So if you guys are interested, say if like Charles Schwab, maybe Fidelity, Robinhood, or maybe some of these other platforms, you actually have to request from those specific platforms and ask them to add these to the tradable funds on their platform. So if you're interested in it, definitely reach out to your broker, ask them. You never know, they may just add it to or even make it available to trade on their platform. All right, so here are some of the minimum requirements to invest into those different ticker symbols we talked about earlier. So WAGNX, that is the retail class. So you need at least a minimum investment standard account of $2,000. Traditional and Roth IRAs, it's $1,000. So I do think there's quite a few retail investors that would be able to do that based on those limitations there. But the institutional class is where it gets really serious. I mean, you need $250,000 to initially invest into that fund. And the net expense ratio is at 1.49%. So this again is a mutual fund. So if you don't know the difference between like a mutual fund and say like an ETF, there's actually a pretty big difference. An ETF typically has a much smaller expense ratio. Those are essentially funds that mimic an index fund. So maybe the S&P 500. So Vanguard has a ticker symbol called VOO that follows the S&P 500. And their expense ratios are less than usually 0.1% because it's not actively managed. They just follow a particular index. There's some out there for the NASDAQ 100, some out there for the Dow, the Russell, and some of those other big indexes where a mutual fund is very different. You have an active manager or active managers, plural, that are actively trading in and out of stocks. So they're actually touching the stocks based on their assumptions on what they want in that particular fund. Now, for me personally, I'm not a huge fan of mutual funds in general. It has been proven that the more you touch your fund as far as trading in and out of, it tends to not do as well as the market. In fact, there is a historic gambling bet that Warren Buffett made against multiple mutual fund managers saying, hey, I will bet you $1 million that you can't beat the S&P 500 over a certain time frame. I don't know if it was a year or 10 years. I'm not quite sure. But none of the fund managers could do that after they applied their net expense ratios and their own charges to the clients that they have. So keep in mind, with even the Wagon Fund needs to do more than 1.5% better than the market, than the S&P 500, to just keep up with the S&P 500. Now, I do think Mohnish Pabrai is a very good investor. He has proven it over a long period of time. It's been rough for him the last couple of years, certainly, but overall, I do think he is a better investor than most that are out there. So hopefully, even with that net expense ratio of 1.49% and 1.24% for institutional class, hopefully he can still beat the S&P 500 long term. That's why I want to buy into it and just kind of follow and kind of compare it against my returns from other stocks that I have. So again, I'm not a huge fan of mutual funds, but I do think that Pabrai, with his goal of having 25 or less stocks in his portfolio, that's a good sign. So most mutual funds, I think the average mutual fund has about 80 stocks in its portfolio. So they don't have like really high conviction stocks that we see. They just buy a bunch of different stocks and then kind of spread it and my way, hopefully they hope that they can beat the market, where I think Pabrai is focusing on less businesses. We saw that his top 5 holdings are 50% of his portfolio. So a fund like this has a much better chance at beating the market than, say, a fund that is holding a couple hundred different stocks. But those are my opinions. We'll just kind of see how everything plays out. All right, so those are my thoughts on this Pabrai Wagons fund managed by Mohnish Pabrai. I'm really excited. I think it's going to be really fun to see what he's going to be buying, what he's going to be holding long term. This is something I'm certainly going to follow. Again, if you would like to follow this fund too, subscribe to the channel. If you got some value out of this, hit that like button. It really helps the channel a lot. I personally appreciate it, and I'll catch you guys on the other side. Take care and God bless.